President Trump leveling more tariffs on $200 billion worth of Chinese goods. The futures are in positive territory this morning, up 51 points on the Dow futures after losses across the board yesterday. Lindsey Bell, if we go back and look at how the markets have done since these tariffs were first, the idea of them was first introduced, this is the market since tariffs were first announced at the end of February. We have gains across the board, and the S&P 500 is pretty doggone close to a new all-time high.
Right, yeah, and I think what you'll see, though, if you look at the actual chart over the period of time since February, you've seen volatility. These markets have been whipsawed. On positive news or seemingly positive news, you see the market spike. On negative news, you usually see it come down. You saw the market come down yesterday in reaction of Trump's tease to the announcement of these new tariffs. But today the market is up. I think that the market continues to believe that this is the next step in a negotiating tactic and that Trump is calling China's bluff. You are seeing them make changes over there. They have devalued their currency. They have reduced the reserve requirements for the banks. They're opening their credit markets. They are trying to stimulate the economy in the wake of these new tariffs.
Well, I think the most important thing that we didn't put up here was we put up the S&P 500, but the small caps.
Were you saying we're not doing a good job?
No. That's fine. I'm just saying that small caps have performed better than large caps, which are the ones we put up on the screen. And so it's important to note that that's more of a there we go. There's the Russell 2000. So you can see that that's actually done better than its larger brethren. And that's more tethered to the U.S. economy. And Trump is currently focused on the midterm elections. He wants to maintain the House. He wants to maintain the Senate. And so what is he going to do? He's going to go out there and say he's had promises made, promises kept as a campaign slogan. And what did he say when he was running for president? He could levy up to 30% tariffs on the Chinese. So what is he starting out with? He's starting out with 10% tariffs on $250 billion worth of goods. Right. So he's trying to show that he's walking the walk. And now we're going to hear him talk about the border wall. And this is all just part of President Trump and how he operates.
Let's go to Verdence Capital Advisor CEO Leo Kelly. What do you think it means? Because this, again, it takes us up to about half of the amount of goods that we import into this country every year just from China that will now have tariffs on them. But the administration starting out with 10% tariffs going to 25% at the end of the year. So the impact will be much smaller before the midterm elections. What do you say?
Well, I think this is the classic Trump negotiating tactic where you have boundaries on either side of a point, and he's going to try to push those boundaries further out in his favor so that when there's a compromise in the middle, it's more favorable to the U.S. This is the strategy that's happened over and over and over again. I think what's important here is to keep in mind that this is 10% of a large number. And this is a game where China's strengths historically are going to put them at a disadvantage. So when you have a massive trade surplus, when you do have tariffs, when you're being restrictive on business coming into your country, that helps you in your growth phase. But now in their maturity phase, that tends to have a problematic effect on their negotiating ability. And let's not forget, they have been pegged to the dollar. Now, why that's starting to release, it's going to take time. And so China's in a very precarious situation. I think we know it. I think this is a classic negotiating tactic. I think the main point here is for everybody to remain calm and keep in mind a long-term view on the markets.
But in the short run, Lindsey, we really need to see a deal get done with Canada, and there's kind of a loose deadline this week. We have negotiations still underway with the Canadian piece of NAFTA. It really has to get sealed essentially by the end of this month in order to get it in front of Mexico before the current president, Peña Nieto, leaves.
Right, and that will be a huge benefit to the market. I think the market will receive that well. But, Leo, I would just ask you, how do you invest in this market right now when we don't really know where things are going? And if this is a negotiating tactic, when does the game end?
Well, I think the way you invest in this market is how you always invest in the market, and that is take a long-term view and look for fundamental valuations that make sense. To be fair, our concerns are not the tariffs. They're the Fed raising interest rates in a more aggressive posture as wages start to improve. Our concerns are high valuations in pockets of the market. And so if you look back in time, there's always something in front of the market that's going to cause concern and have folks thinking, this is the moment where the 10-year bull market comes to an end. I think you have to stay calm, look for value. So right now there's plenty of opportunity in the market, but there's also some overvaluation in the market you have to be aware of. And I will add one other point. Let's not forget, for every tariff dollar that's put into the economy, and we hear these stories about certain industries or businesses that have these challenges because of the tariffs. Remember, there's another group of businesses that benefit from those tariffs.